Recently, one of you guys left a fantastic question on a comment on one of my recent videos asking, when the stock market crashes, where does all that money go? Does it just evaporate? Does it cease to exist? Does it get transferred to somebody? Is money kind of like energy where it's not created or destroyed, it just gets transferred from one place to another? So we're going to do a deep dive into that because I love this topic. It also helps clear up a few misconceptions that a lot of people have about wealth. So first, we have to take a look at the value of the stock market. Right here is a chart of the market cap of the S&P 500. You can see it peaked in December of 2021 at about 40 trillion, and today we're sitting at about 30 trillion. So let me explain what that number is and how that number is arrived at. So you have the S&P 500, which is one way to measure the stock market. It's simply a list of 500 companies that Standard & Poor S&P has said these make up the stock market, and it's called the S&P 500. So you take those companies, you look at their price per share. Then you look at their price per share, multiply it by how many shares there are. That gives you the total market cap of that one company. For example, if you own a company and it brings you $100,000 per year, you might say that that company has a value of $300,000. So you might go and try and find a buyer to buy your company at $300,000, and depending on the company, you might actually be able to do that. You're the sole owner, so there is one share. That company's price per share is 300,000, and you sell that one share, and the whole ownership of it goes to somebody else for $300,000. Publicly traded companies are a little bit easier to value because they're made up of millions of shares at, $20 or $50 or $100 a share. On top of that, you have some shares that are constantly being traded all day long, and the price is constantly fluctuating with all the potential buyers and all the potential sellers coming in and finding an equilibrium, the price at which the buyers and the sellers meet and a transaction takes place. And at that moment, that very moment that a transaction takes place at, say, $100 per share, if there's 1 million shares total, that moment, that company is said to be worth $100 million. That is because, hypothetically, at the last traded price, this is how much a new owner was willing to pay. So that means all the shares are hypothetically worth that exact same amount because all the shares represent the exact same amount of ownership and have the same role in the company, just one share of ownership. And so if that share of ownership is worth $100, then all shares of ownership are worth $100. Therefore, the entire company is worth $100 million. So when we look at this chart that shows the entire S&P 500 is worth 30 trillion, that is just adding up the market cap of every single company in the S&P 500, all 500 of those, and adding that all together, we get a total value of $30 trillion. Now, in that explanation, you probably noticed that this might not be the best way to value a company that is as large as some of these companies in the S&P 500 because only a few shares of the total number of shares are ever trading at a time. And so the question is, what would happen if everybody who did own shares tried to sell all at the same time? Would they be able to get the exact same price that the last guy got? And the answer is absolutely no way possible. You see, if we take a look at a company like Amazon, we can see that it regularly trades in between 50 and 75 million shares every day. However, the total number of shares is about 9 billion. And so all of the buyers there on average that are coming in on an average day to buy shares, it's around 75 million. There's nowhere near enough buyers out there to support if all of the Amazon sellers tried to come out and sell all of their shares. If that happened, you would see the price of Amazon start to fall extremely quickly, as this seller might be able to sell to somebody at $60 per share, but there might not be another person there that wants to buy shares at 60. Maybe the next buyer only has enough money to buy Amazon at 50, and maybe after that it gets down to 40, and maybe after all of the selling is done, the people who are left over wanting to buy Amazon may only be willing to pay $10 per share. And so when we look at the price of the stock, that's simply saying this is the last price that any shares traded at. And so because this share is identical in characteristics to the rest of the shares, we can ascribe that value to the company. But ultimately, we all know that if everybody tried to sell at that price, there's not enough buyers out there to all buy up at that price. And so when we look at the S&P 500 and see that the total value fell from 40 trillion to 30 trillion over the course of this year, then the question is, what happened to all that money? The answer is the money was never there to begin with. In fact, if we look at this chart, we can see this is the chart of the M2 money supply. This measures how much money there is in the system. Right now, the money supply is about 21 trillion, and that's the exact same amount of money there was in the system at the end of last year. So despite the fact that the valuations of stocks that make up the market have fallen by 25%, the total amount of money in the system has stayed the same. Oh, and by the way, if you are wondering how to determine whether stocks are cheap or not right now, they're down 25%. Many stocks are down 60, 70, 80, 90%, and you don't know whether they're on sale or a good deal. My bear market investing guide is what you need. It teaches you how to, number one, identify the best companies in the world, and then number two, figure out what price they're actually on sale so that you know what price you should be buying these companies at. It's $99 only right now, linked in the description below. Not to mention the fact that the total money supply is only 21 trillion. Just the S&P 500 alone is worth 30 trillion. So the S&P 500 alone is worth 50% more than the total amount of money there is. And that's just the S&P 500. That's not all the real estate. That's not all the other stocks that aren't in the S&P 500. That's not all the other assets that there are in the world. And so the fact is that you don't need an amount of money to be transferred or created or destroyed for a loss in an asset to happen. When the price of an asset changes, like a stock in the S&P 500, that simply means that people are willing to pay either more or less for the new shares. And so if you buy shares at $100, they go up to $200 and then back down to $100, nothing really changed in terms of the money for you. It was all unrealized. So as we can clearly see, the amount of wealth in a system can both be created and it can be destroyed. If wealth couldn't be created, then today we would have the exact same amount of wealth that existed 200 years ago, 500 years ago, 1,000 years ago, and it's self-evident that there is a lot more wealth in existence today than there was thousands of years ago. So humans absolutely have the ability to create wealth and create more value in our world. Similarly, if we decide to blow it all up and destroy it all, then all that wealth can absolutely get destroyed. If your windows get smashed and you have to pay extra money to replace your windows, you are not better off and the system is not better off. You just had to pay money to replace your windows and now you can't pay money for something else that you would have wanted instead. That's a net loss. So wealth can be both created and destroyed. Now, let's take it one step further. Even this amount of money, the M2 money supply, can also be created and destroyed, and this money is not actually really there. For instance, you get your $2,000 in a paycheck, you deposit it in your bank account. It never stays there. It's not like they're just taking that and putting that in a vault. They take that $2,000, they turn right around and they lend that out to somebody, and they lend out about, let's say, $1,800 of that. Well, what happens when a loan is created? Somebody else swipes their credit card and they borrow $1,800 and they use that to spend. When they spend that money, where does it go? It goes into somebody else's bank account. So that $1,800 goes into somebody else's bank account, and then the bank takes that $1,800 and lends out $1,600 of it. And they lend out $1,600 of that plus a bunch of other money to a business who just took out a loan, and they're using that loan to pay you and your paycheck. And $1,000 of that comes to you in the form of their loan that gets deposited into your bank account. Well, now your bank account has $1,000 that the bank takes, and they take $800 of that, $900 of that, and they loan it out to somebody else. And so this $21 trillion of money that you see is not actually really there. Yes, that's the number of deposits in the system, but if everybody actually went to go get it, it wouldn't be there. It would all evaporate because they'd have to recall all the loans, which many times those loans are not callable at a specific time. And so they're being paid back over the course of 5 years for an auto loan, or 30 years for a mortgage, or even 30 days for a credit card. And so nobody has the ability to go and withdraw $21 trillion from their bank accounts. And so just as this M2 number goes up, as the money supply increases from the Federal Reserve printing money and banks loaning money into existence, so this number can also come crashing down if we start to get a bunch of debt defaults and deleveraging and prices start to collapse across the board. So in the long run, humanity does create more wealth over time, but in the short run, we have the ability as people to both create and destroy wealth and create and destroy money. Sometimes it's transferred, but in the case of something like a stock market crash, the money was never there to begin with. It was simply a hypothetical valuation, and now people are willing to pay only a smaller amount for those same shares compared to what they were used to willing to pay. And even in the bank accounts, the money is never actually there. As always, really appreciate you guys. Thank you so much for watching. Have a great day.